The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. We are Friday night here in Asia. There's some stuff going out on the street out there. This is the way it goes on the weekends here in the Philippines. So if there's some noise, I apologize. Right outside the window here. Friday morning, obviously, in the USA. We're taking a look immediately at the Japanese yen. Just want to show that in the den. And the only report we've got coming out today, in my opinion, that's got any oomph to it is new home sales at 10 a.m. The yen I've got pulled up because we had been really trying to stay away from the short side on this thing, and we're looking for some decent pullbacks. And my mouse is blown up here, so we're going to move the mouse pad here on one of my screens. So as we look at the yen, we had looked at we have looked at the weekly, and we kind of been trying to we tried to pick some battles here. Oh my goodness. Are you? Sorry, guys. Let me readjust something here. I've got about 5 screens here, and we've got to plug this back in right now, and it should take a couple of seconds here. Okay. Get you guys back in the room on the right screen. And I'm going to start the camera again. Okay, so as we're looking at the yen on a weekly, we talked about trying to pick a battle on the way down, 107.07, I think 106.20 something down there, and then 105.44. And when you're trading these long-term views, you've got to really give yourself some room, and you've got to be willing to stop yourself out sometimes. And I tell you what, my screens are freaking out here, so let me see. My goodness. I may have to go with one screen here. Okay, so as we're looking at the yen, you got to give yourself a little room on some of these trades. And when you're trying to pick battles, especially on a long-term basis, you want to give yourself, a buffer zone, a noise level, if you will. And when we had kind of finally found the level that was comfortable and got the bounce, it was a decent move up. But we also look at new profiles and new levels for new support areas. So that new support area, as you can see, which has worked out great this week, is around 106.14. And now we've said, where's the target? So as we look at this, we took a look. In fact, the past couple of days, we were talking about, the new targets up top are going to be around 108.39. That was met 108.35. Maybe 36 rounded off yesterday, and now we're coming off a little bit. So did the free video today, which is on TFNN's website, on the yen in particular, and what I wanted to do was be able to show how this works out and also give the idea that we're going to have to now just kind of sit and wait. And sometimes that's the way trading goes. You've got to sit and wait. You've got to wait for new information to come about, and you've also got to wait for confirmations. I am sorry, guys. I've got a video card that is just blowing up right now. So let me see if we can get this restarted here on these screens. And we're probably going to take the video off of me, I guess, because that may be causing an issue and a conflict here. So hang tight, guys. All right, we're going to get this back over here, and we're going to restart our screen, and hopefully that's back up. I'm going to leave the video off, Al, on me for a little bit, so let's just kind of focus on the screen, I guess. Okay, so as we meet these targets above, what do we do now? We want to wait for new information, or we want to, I was saying we want to wait for confirmations one way or the other. And right now we really don't have any confirmations. We've had a big move up. we're within a new fair auction, so to speak. We're still in long mode on the long-term basis on the yen, and that's because look at this. It's kind of okay to be long, not okay to be short on a long-term basis, and we don't want to trade against that concept. So, as we look at the yen, the confirmation that I'm looking for is if we have a close above this inflection point above 108.3839. That may not happen today, so I don't see any good leverage points down below anywhere near here. We've kind of used launching pads to move higher, and that's great. But right now it's a waiting game. So, again, it was just a little bit of a primer on, what to do with the yen now. And I'm not a big fan of contra-trading this from the short side because, where are the odds? I mean, you're as a trader, you're trying to find an edge to trade things, and I don't think there's a lot of edge on the short side with the yen right now. So that's just kind of the way that works. Staying on the currencies a little bit on the first section here, the British pound, yesterday we ended up meeting some targets down below, pretty much almost to the tick here, reached a low of 159.99. We talked about that. 159.81's been the low here. But, what do we do with the pound now? Again, here's the situation on the weekly. I'm a big fan of waiting to close below those two areas, the unfair lows on the daily, unfair lows on the weekly, or using inflection points above to just get off more shorts here. So not a lot of conflicting information on the pound to really think otherwise on that. So that's kind of where that sits. The really big thing I wanted to pull up today is we've been kind of pounding the desk on going long this ruble. Well, in essence, it will be short because it's getting killed. But as far as this chart goes, we were taking a look at this from long side. So as that compression happened against that inflection point that we're showing in the den right now, and I'm going to kind of slide this down and let you guys see this hopefully a little bit better. If my chart's going to work here. Okay. Well, overshot it. Okay, so here's this, the compression factor I talked about. When you go into inflection points, you want to see this thing pull off and not want to be near it. But fundamentally speaking, as we had Eddie on, and there's some I talked to Eddie 5 times today. He's still in Moscow. He's leaving tomorrow, I think, heading back to Spain. But, there's some things going on there. There's some people starting to freak out in the financial business, and they're basically willing to take anything to get out of these rubles. And there's some innovative things going on trying to get these things transported outside of state sanctions into, the Hong Kong dollars of the world, the Rwands of the world, even some other countries I won't name right now. But, I think, like we said, when we were back in the 38s, it was 40. And I even said the word 50 at one point. I think that's a foregone conclusion. You could come in like we talked about, and Putin could kind of like say uncle on some issues, but he's not going to do that. I mean, so you've got some financial firms that are now almost considering that, they're going to have big issues and they need to make some conversions now. And this probably will get a lot worse. And this is something, by all means, do not fight. There is no value to this thing that is it's too high and it needs to come down. I would not think that way. So the ruble, again, nothing to key off of here. We've already blown through the new unfair highs here, which were around 41 and some change. And, hopefully we'll get some new information on the ruble soon that you can have some new inflection points to key off of there. That being said, as we stay on the currencies here, let's take a look at the dollar. And as we take a look at the dollar, we talked about meeting some targets above. Those targets have been met, 85, let's just call it 86. But look at what's going on here. We're not really wanting to get away from this. So, that to me tells me that I need to kind of drill down a little bit. I need to take a look at where my new inflection points are in the shorter term time frames within this fair auction to try to leverage against. So I'm not a big fan of shorting the dollar, as you guys know, and I'm looking for closes on a daily above 86, or I'm looking for pullbacks. If you get a healthy pullback in this, the big number down below is 84.69, but the 240s, 85.46 are down here, which line up with another 240 top. So, if you want to be patient, that's kind of the patient area to be aware of. But as you talk about the dollar, we've got to kind of bleed into what's going on with the treasuries. And, obviously treasuries are up, rates are down again this morning. To me, this looks somewhat like a continuation pattern that we might go back and test some highs. But let's just step back and think about this for a second. Markets have made a massive move up. I'm talking 6 to 7% move back up from the 10% corrections, or whatever you want to call that. And look at the way the 10-years acted during that whole march up the past 5 days, so to speak. So we're basically unchanged. So what does that tell you? To me, the classical relationship is, and the markets may, that this is kind of the markets liking this too, but I think we're going to at least shoot back for the highs. Does that make sense? Doesn't have to. 128.20. We're sitting. Are you guys seeing the same screen? Because I just had my screens freak out again here. Are we still good on the DIN? Okay. Okay. So anyway, I think this 128.20 area is still going to be a point of contention that we're going to have to shoot for and deal with when we get there. Will we go higher than that? I don't know, but you've got support areas. If you're going to try to be patient, you're right in the middle of this daily fair auction, 126.09, and I'm going to kind of give you some shorter term information here. If you got to trade notes right now, and there's a lot to be said for trading intraday, but short-term support 126.29, and targets on that short-term support 127.19 above. So that's the deal on the 10-year. I want to talk about the 30-year a little bit because some folks out there are really, this is their treasury of choice. A little more volatile without question. Here's the situation that the support's down below, 140.27 up top. Targets, in my opinion, 144.01. And why do I keep talking about targets above? That's because I personally feel that the stock market may move down from this 1930, let's just call it 1935 to 1940 general neighborhood. I think we could come off of there on the pullback, and I think the 10-year therefore. And where's the risk? We'll talk about that when we come back. And hopefully, I'll get my screen set up a little bit better here. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We took a look at some treasuries and a couple of currencies a while ago. We're going to look at the gold situation, and I don't feel like I got sucked into gold getting long again, and it's just the way it works. It's the way trading works. It's the breakout. It's the retest, as we talked about, and now we're getting back down below 1241, which I don't like, and I don't want to deal with it. I'd rather see, like we talked about yesterday, getting back above that area. That's one trade from the long side. I'm not looking at this from the short side. And I'm looking at accumulation down here at 18. All right, and if 18 doesn't work, I'm saying uncle. All right, and that's okay, and that's just the way to possibly look at this. But breakouts above 41, that's okay also. Right now, what are we in? We're in a fair auction. We're in a so-called balanced area, and I don't know if you guys had your screens freak out again or not. Are we still looking okay here? Let me reboot the screens one more time. All right. Thanks for hanging in there, guys. We might get on another computer after the break here. It's turning into nonsense. Okay. I'll tell you what. Let's kill the camera, Al. I just feel like that's going to cause some conflicts here. So gold, just to kind of summate what we were talking about, somebody said it's definitely okay to kill your camera. What does that mean? 1218 is a buy point and 41 is a breakout point. This is kind of just the way I'm looking at gold. And right now, this fair auction, this balanced area, in my opinion, we could kind of herky-jerk around here. And, why do I want to deal with that. So that's the way I look at it. I want to try to make it very black and white when it comes to trading this stuff. I'm not going to even review silver. That thing seems to be stuck in eternal balance. And it's going to be weird to watch silver and see how long this horizontal thing continues with it. It's really interesting. But you know what's cool about silver, like we talked about buying that strangle, as the volatility is just kind of sucking back into the abyss, you got to look at the options. You got to look at the, you got to kind of think like a market maker here. And, I just think you got a fantastic situation possibly because something's going to freak that instrument out at some point. And we're going to be sitting on some huge volatility, and whether it goes your way that you thought it was going to go or not, those three things that options are comprised of: implied volatility, intrinsic value, implied volatility, and historic. So, and time. God, I had a brain fart there. Excuse me, guys. So the three things are time, implied volatility, and intrinsic value, just to give myself a little lesson there. Let's take a look at something else I want to take a look at in this short segment. Soybeans, November. As we wait for this to come up here. Soybeans have kind of gotten out of, I'm waiting for this to, change here. Soybeans, when we had these closes above, and we hadn't talked about beans in a while, I personally thought beans were going to probably head even lower. So as beans have climbed, we've kind of reached inflection points, settled back, and then closed above. So the recent unfair high, 972 a bushel in November beans, were well above. There's nothing to key off here. And on the 240s, the information that I want to hand down is 978, unfair highs under 240, and nothing to key off of up top. So 72.78 is going to be kind of maximum support on any pullbacks, which we haven't had after we've closed above on beans, to kind of get maximum support back in force here. Okay? So I don't think you can buy beans up here. I don't think you can short them. I think you can go with the trend, and I think those pullbacks areas, 72.78, is going to have to be what you're hopefully going to focus on. Crude oil, as we kind of finish up with commodities here before the break, and let me see where we're at. Yep, we're going to go to break. We're going to take a look at crude oil when we come back, and then we're going to get into some stocks and indices. We'll be right back, guys.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to take a look at crude oil really quick, kind of to button up a couple of commodity future type outlays we're looking at. Here's crude oil. Again, 80 has seemingly held. It's a great whole number to pay attention to. This is December crude now. 79.97 are the unfair lows. We've obviously gone there recently and bounced off. That's kind of the cool thing with the profiles. Is we've made some new lows before, but the profile was outputted a little bit higher, a little bit more height, if you will, that was incorporated into this output, and we've come and retest. I mean, this line is not adjusted; it's in force. And when we were having this orange bar on the daily, this is basically what we're given. So, as we've tested this thing, closing close to it one day and then kind of getting back off of it. I don't know. I'm not a big fan of crude oil rallying because I think there's getting ready to be some more dumps in the marketplace and more suppliers, namely some of the things going on in Russia. But, I feel like we're going to probably shoot for new targets down below. And I'd love to see it close below 80, basically. And then I'd like to get back in the game in crude oil. Right now, it's kind of a crapshoot, in my opinion. People can be looking at this as, hey, we're basing, we're doing, if you step back and look at it in general, it seems to me, and I'm just kind of looking at it from a classical technical analysis standpoint, it looks to me that we're kind of compressing down here, gathering some momentum, and we may break out again. I'd love to know. I haven't been watching Andy lately. Somebody just mentioned that, and I don't know Andy's outlook. I respect it very well. I would love to know what he's been saying about crude oil lately. If somebody wants to type that in, because he's a lot more in tune with this. I'm looking at it from a technical analysis standpoint strictly. So that's kind of my take on crude oil, and that's where I think the edge is, put it that way. And I think right now it's kind of a no play until we either go below the 80, this is my opinion, or get back up into that 85.18, back up in there. And then I think you probably got to put on the short hat again at that point. So let's take a look at the S&Ps, kind of bouncing around here this morning. We'll start with the very short term. This is our 60. We normally don't look at it. So the 60 inflection points are, let's see here, let's call it 1950 rounded off, and 1935 below. You normally don't see 60-minute volatility ranges that big on profiles, but that's the very short term. Here is the, Michael, we have lost connection on, we just got it back up, sorry. We are now have an e-signal drop here, but the 240s, just calling out some numbers here, 1923.24 up top, 1953 rounded off. So again, a little bit bigger expansion of the 240 box. Now we're getting into the dailies, and this is kind of what I've been, my God, look at that retracement. Unbelievable. I've been opting out on longs here because I think that at any point we could come back down, but this is kind of disturbing. This action, this classical action up here, unfair highs 1937.40, and I've been talking about 33 to 37, like a little DMZ there, with obviously a little bit of noise factor you got to put in there. We came off, but going back above that quickly and closing above that general area, and now just kind of gravitating and not wanting to be below there, it's a little concerning, to say the least. The good news is yesterday, as we made a high of 1956, we've pretty much, as you can see on our weekly, come all the way back up into closing below and coming back and trying to retest where the ultimate breakdown point was on the weekly numbers. So, again, I don't want to kind of portray myself as like, oh, well, it's going to finally work out here. I mean, as a trader, again, you got to just find areas that you feel are high probable, trading setups, and just pick the battle. I think we made a great amount of points on the downside here. There's no mitigating that statement. 200 points down after we looked at market breadth changing on basically the all-time highs day, and then being able to kind of manage this on the way down was great, because we were short-minded, picking shorts, picking breakouts, picking retracements. But as we've moved up, there's been about 3 times in particular that I've been personally wrong about this on my own trading account. So I'm going to try it again. 1955 is that unfair low on the weekly. We reached a high yesterday of 56. So again, trying to find high probability setups. We're about 14 points down from there as of this morning. And I'm trying to stick to my guns here as those weekly unfair lows are before us. And if we can get back down below 33, 37, I'm going to feel a lot better about that. But I'll be honest with you, the classical churning action and not really wanting to come off those numbers very much right now is a little concerning. But again, the good news is you know where to put the stops if you're playing this game above 55 based on your appetite for risk, and hopefully being able to add to that position if we don't go above there, below this 33, 37 area, and then maybe we can kind of get down and start exploring some of this fair auction below, because we really the market, the stock market is where it is, and that's just the way it is. It doesn't have to be any higher, it doesn't have to be any lower, but what we're trying to do is just find inflection points to key off of here. All right, let's just go back to oil with that comment there. as we wait for this to come up, and now we've got some indicator problems here. So, Michael, we got an EFS error on our indicators. Is that, you want to go into the cloud really quick? Okay. You're going to probably knock me off, but that's okay. So, as we get out of this, I'm going to pull up our scanner really quick, which I was going to do anyway. Okay. All right. So what, I had planned for today, and we've got about 7 minutes left on this section, is I've got I'm going to select none. I'm going to select our S&P 500. If you haven't looked at this, folks, I think TFNN is going to release it finally next week. We've had some coordination issues, and I think we're through all of them. We still have my picture okay, Al? Okay. And as we wait for this to load, we're going to well, let's see here. Are we good on the charts yet, Michael? Okay. All right, a couple of things of note. Tesla, I guess Toyota's selling some of their shares in Tesla. I wanted to pull that up and kind of give you the inflection points on that. That could be a little bit of a rattle based on some info. Okay, so our got a kind of a iffy connection here today, guys. I apologize for that. Our scanner's up. Just to finish what I was saying, Toyota's selling some of their shares. They bought around, I think it was $50 million worth of shares, and that was way back when, so I think they're going to start cashing out on it. Lockheed Martin, we're good? Okay, cool. So I don't have to go through the fundamental stuff that I don't want to go through. All right, here we go. Let me pull the charts back up. Okay, so crude oil is again bouncing around here, going down. Actually, kind of seemingly this past move down. Let's pull up the S&Ps. Just kind of. Now, what happened to this? All right, we're pulling up the S&Ps, and we've got the same picture here. So we're gonna move on. I thought we had a movement there. All right, guys, we're going to pull up some things I wanted to pull up anyway here now. You're having a time this morning. Whew. Let's see if we can pull this up. I don't know if this is Amazon Cloud or eSignal here. We're trying to pull up Tesla. Amazon also got murdered. I know you guys probably know that. We're going to try to review Amazon and try to figure out where some battle points can be picked on that. Is this the cloud or is it eSignal or what? It just seems super slow. I'll show you guys our office on Monday. I'll spin around, let you see some of the people in the background here. Let's see. Okay, so Tesla, if we can pull this up, it's like we're in molasses here. Yeah. You know what? Okay, here we go. All right, so the bands on Tesla, 222 down below, 241 above. It doesn't seem like any big news on Tesla is going to rock this thing right now. Ah, Jesus. Tell you what, I'm going to forego the charts here and go back to our scanner. All right, so what we normally do when we're not having massive connection issues, we're going to take a look at, we've obviously had a big move up in the S&Ps. And as you can see, as I scroll down, We've got a lot of greens now in the daily area, and the daily area being this. So, how do I find some useful information out of this to try to hopefully put some odds in my favor? So if you watch this show, I've been leaning on the short side a little bit here as this kind of bounces happen, so to speak. So what I want to do is I want to try to find daily setups, and I'll be able to see some external things going on with after we pull these daily setups, the weeklies namely, is what I'm looking at. I want to see things that are still trading below the box. So I've got show only matches results here, and what that's going to do is it's going to pick out some things that are just kind of not cooperating with this bounce. So Murphy oil, and some of these things are like watching paint dry when you trade them, but again, I'm a big fan of boring is good when it comes to trading sometimes. So also we've got some other, Coca-Cola. So I want to take a look at Murphy oil and Coca-Cola right now. So MER and KO. And if we've got our charts back, MUR, so again, Murphy oil's bounced a little bit. Crude oil's, kind of churning around down below. But as we look at Murphy oil, we're provided a decent inflection point. The reason I picked this out, too, is because it was showing bottom. And we've got something here at 53.09, let's just call it 53, that we can hopefully lean against. And this is the kind of real black and white stuff that I like. Stocks in a big downtrend. Anything can happen. But, again, this kind of keeps me in the camp. Things on the lows can go lower. We're in a downtrend, and now we've had a little bit of a rally, kind of a fake out, and we may head lower on this one. And I can't, for the life of me, buy this thing, as always, until we break profiles, and that's above 55.50. And somebody may be saying, well, Jesus, you're going to get a 2.5 point, approximate 3-point rally from there before you start buying it. Yeah. That's exactly what that means, and I'm willing to take that stance. So let's take a look also at Coca-Cola. And I think we got a mouse on the wheel here driving this thing today. So we're going to go to a break in a couple of seconds here, and we're going to pick this back up in just a little bit. We're going to look at Amazon and see if there's any ways to pick battles around that thing. We're going to take a look at Coke. Appreciate you guys hanging in there with some of these problems. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show, and thank you, Steve Rhodes, for offering to show some charts here. As I was saying in the den, I think we've covered the full spectrum of technical difficulties today. 40.43 on Coke. This is the 240, 40.43, and up top 41.08. So again, Coke is more than likely, if we get a market pullback, I mean, Coke could actually, it's weak stock and a decent rally past couple of days, even with earnings thrown in there. We've got to remember all that and probably consider this a weak instrument. It's not meaningly. Let's see. Hold on. Amazon. All right. So I want to pull up Amazon too. We got about 3 minutes left. And how do you trade something like this? You probably don't trade something like this. Here's the 240 situation. So 300 is that bottom rung here on Amazon. I want to kind of focus on Amazon for a second because it's a great. Who knows what's going to happen when earnings comes out, and when those things are on the horizon. A lot of times it's, it's a coin flip, 50-50, and if you stay in stocks through those things, you're going to be right 50% of the time. I mean, it's just as the data gets smoothed out over time, and you trade longer. If you say that, hey, I'm going to trade every earnings announcement before the announcement, like somebody smart like Jim Cramer does. I've seen him carry people into a body bag, buying or selling things before these announcements. And I'm, if he's listening, that's great. That's fine with me too. I think that's actually doing a social injustice to quite a few people, because a lot of times that's the real risk is blowing your account up on gambling and throwing dice before these things happen. My opinion always has been, you want to take the ball home and come back and play every day. And if, having things like that, let's just say you were long Amazon. I mean, like, what do you try to do to rectify your trading account if you got those things thrown in, and your game plan has been not to get off on a total tangent, but to try to mitigate risk along the way. And then when those things happen, and I know you guys know this because it goes through everybody's mind when you're trading, do you try to make this money back fast, and do you change your trading plans based on a big hole? So anyway, 321 up top, 299 down below. We're trading 283, I believe, 284 right now. Here's the situation on the 240s. Nothing new. So I think Amazon, if you're considering doing something with this, you really just have to be patient. You have to kind of wait. We'll pick this up every day. I'll give you some new numbers that I feel are appropriate for this stock. But again, it's kind of a wait and see right now. Let somebody else figure out where the real price is. Apple. That's where we are. There's no reason to short this stock, guys. I can't find a reason. As we kind of traversed above and started showing the strength above 102.38, wasn't a good situation to try to fight the Goliath of the NASDAQ. So on the short-term basis, the 240s, I will give you a couple of things to glean out of this conversation. 104.18 could be a breakdown point on the 240s, and then we may see that 102.38. I think was that number we talked about before. But until that happens, guys, buy dips on that. Thanks for joining us. Thanks, Steve Rhodes, for offering to show the charts. And Steve Rhodes is next. You will thoroughly enjoy his show. Hang around, and we'll pick it back up Monday. Thank you very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.